Okay. Good morning, everyone. Good morning, Sumit. Good morning, Manini. Good morning, everyone. So today we pick up Ind AS 21, that is the effects of changes in foreign exchange rates. I trust you would have downloaded the presentation which I had shared. Okay. It's an important standard, and you have already a background of this standard from your intermediate, where you did AS11, which deals with certain similar principles. But of course, this being Ind AS, we have certain different set of principles, okay, for some of the transactions. Okay, good morning, Ankur. Good morning, Rashmi. Okay, so now coming to the chapter. Okay. See, this chapter is broadly divided into, we can say, four categories, or what you can say, four sections. Okay, the first one is currency types. Okay, this is the first what we are going to discuss. This is new. This was not there in AS11. The second one is foreign currency transactions. Foreign currency transactions. This is what you have discussed in AS11 as well. Even the principles are almost similar, so you won't have a problem in the second one. Okay. Then you move on to the third one, that is foreign operations. Foreign operations. If you remember, in AS11, you would have studied foreign operations, conversion of a branch trial balance situated outside India to INR. Okay, this was there at least when we had studied the intermediate. So I think you also had it probably. Then the fourth one is intercompany transactions between parent and foreign subsidiaries. How do we do the eliminations? Okay, so these are some of the transactions which we are having, 1, 2, 3, and 4 broad sections which we are now going to discuss. Okay, then you have a couple of other things, but they are fairly small. But this is the broad outline of our chapter Ind AS 21. Okay, so now coming to our discussion, the first one, currency types. This is largely a theoretical discussion, but it's an important one. It's a new one from the perspective of your understanding. We did not have this discussion earlier under AS11. Okay. So now, why did we need a separate standard in that deals with foreign exchange? Well, we are having a lot of multinational companies like, say, Unilever or Apple or Pfizer, Honda, Toyota, whatever you name it, and then you have n number of multinational companies which have their operations across borders. So these would be either in the form of parent and a branch. For example, SBI has a branch in New York, has a branch in London. So you are having foreign currency branches, foreign branches. You could also be having subsidiaries, like Apple is having its subsidiary in India. Companies in India have their subsidiaries outside India. So you're having branches, you're having foreign currency, foreign subsidiaries. You are also having foreign currency transactions, okay, like import, export. Okay, you import raw materials, export your goods, services. TCS exports its services to customers outside India. Okay, so in all these cases, we are having transactions which are denominated in a different currency. So for that purpose, we needed a standardized guidance on how to convert that currency into the reporting currency. Okay, so for that purposes, we had Ind AS 21 that came into existence. Okay, likewise AS11 also. So now what am I going to discuss? What am I going to discuss under this? I have told you, but still, entity having transactions in foreign currencies. This is transactions only. Okay. If this is the case, we will be discussing how to include such transactions in financial statements. Okay. So the conversion is prescribed here. entity having foreign operations. We will discuss what is foreign operations. You can think it of like a branch or a subsidiary for the time being. The Ind AS 21 tells us how to include such operations in the financial statements. And finally, entity presenting its financial statements in a foreign currency, how to translate it into a presentation currency. We have now two terms which are there. One is foreign currency. The other is a presentation currency. Okay. So we'll see what these are in a couple of minutes from now. Acha, what is being covered? What is being covered? Accounting for transactions and balances in foreign currency. That is export, import, whatever is there. Translating results and financial position. Results means P&L. Financial position means balance sheet of foreign operations that are included in the financial statements of the entity, either by consolidation or by the equity method. So consolidation means it could be consolidating a branch into the head office accounts, or it could be subsidiary consolidating into the parent. Equity method for associates, joint ventures, etc. Okay, what is a foreign operation? It could be a subsidiary, it could be an associate, it could be a joint arrangement, or a branch of a reporting entity. I presume you know all these terms by now. Subsidiary, Ind AS 110. Associate and joint arrangements, we've done Ind AS 111, Ind AS 28. Branch of a reporting entity does not have a separate Ind AS. It is the general accounting principles that are there for head office vis-a-vis branch accounting. Okay, of which these which are based or conducted in a country or currency other than those of the reporting entity. And finally, translating an entity's results and financial position into a presentation currency. What is excluded from here? Obviously, common items hai. You are excluding those items which are covered separately under other Ind ASs. For example, foreign currency derivatives. It's covered under Ind AS 109. So those are excluded. But those derivatives which are not within the scope of 109 are covered under this standard. We'll have a look. Okay. Hedge accounting for foreign currency items. This is covered specifically under Ind AS 109. Cash flow presentation, translation. How do you present in the cash flow statement? How do you translate cash flows of a foreign operation? All of that goes under Ind AS 7. So obvious exclusions. Okay. And long-term foreign currency monetary items for which exemption is opted. So this one you will come to know when you are doing Ind AS 101. Okay, this one you will come to know when you do Ind AS 101. Okay, so now coming to the types of currencies, Ind AS has prescribed three different currencies. The first one and the most important one is the functional currency. The most important, vital, matlab starting point of Ind AS 21 is identifying what is your functional currency. This is the most vital discussion that we will be having. Once we are clear about functional currency, we then move on to understand what is a foreign currency. Foreign currency definition is very simple. Currency other than functional currency. And when you talk about presentation currency, currency in which the entity chooses to present its financial statements. So presentation currency, foreign currency is very simple. The main important discussion is what is the functional currency. Okay. AS 11 had a very simple rule. Reporting currency, foreign currency. Reporting currency was currency in which you reported your financial statements. And for that purposes, all entities situated in India had their reporting currency as INR. So your foreign currency would be anything other than INR. But Ind AS 21 does not take that approach. Okay. Ind AS 21 tells your functional currency is the currency of the primary economic environment in which the entity operates. It is the currency of the primary economic environment in which the entity operates. Fair enough. So what do you mean by primary economic environment? Normally, it is the one in which it generates as well as spends the cash. It is the one in which it primarily generates and expends the cash. That is, it operates. Okay. And normally the standard also agrees that it is the country, it is the currency of the country where the entity is located, It might, however, be a different currency. Now let us understand with a couple of examples. Okay. Now it starts to get quite interesting. Okay. Now it starts to get quite interesting. Okay. So first one is, let us assume you are an entity, TCS. Okay. We start with easy ones first, and then we move on to a slightly complex example. We start with TCS. TCS is registered in India. TCS is registered in India. Okay. Revenues of TCS are from India and abroad also, but from India plus abroad. Okay. Employees, I'm keeping a very simple case. I'm not saying employees go outside for project work, etc., etc. Employees in India. Competitors. Most likely competitors are also in India. Example, Infosys. Example, Infosys. Okay. So now I want you to tell me if TCS has to price its product, if TCS has to price its products. Okay. The question is pricing its products or services. My question is, what are the factors that TCS has to consider when pricing its products or services? Or rather, what are the factors which influence the pricing of its products? For example, suppose there is a policy change, just making it up, there is a policy change that gives IT companies within India a tax exemption of, say, 40% of its profits. So the tax exemption has come to a company like TCS. Now, there is no such exemption in the United States. There is no such exemption in the United States. Obviously, by reducing the tax, TCS can reprice its product, can reprice its services. What is the factor which is influencing such pricing? Is it the change in the tax structure within India? Or is it the fact that there is no change in the tax structure in the United States? There is no change. So the answer is, sir, it is obviously the fact that you are reducing your taxes within India. As a result, you are able to reprice your products or services. Let us take an extension of this example. Suppose TCS and Infosys have received two similar contracts. You need similar manpower, similar requirements. Only thing is the contracts are one for TCS, one for Infosys. Okay. Now, if TCS wants to price for a particular contract, who is its nearest competitor? Its nearest competitor will obviously be Infosys. Its nearest this will be Infosys. All right. So it will price its products based on how Infosys tends to price. Because if it looks at the pricing of its competitors abroad, TCS का कोई foreign competitor रहेगा, there will be some competitor abroad. It is going to charge a very high price because of the currency that is prevailing abroad. Will that price impact my chargeability in India? Answer is no. The pricing will be impacted by its competitors within India. So Indian competitors are giving pricing decisions affected. Next, if I have to pay the salaries to my employees, if TCS has to pay salary to its employees, what is it going to factor in? Is it going to factor in the similar prices of employees outside India? Or will it look at the same workforce? What is the general salary based on conditions situated in India? Answer is, sir, clearly it is based on the conditions, the market trends within India. And therefore, even the costs are also going to depend on the factors within India. The costs are going to depend on the factors within India. So therefore, costs are also dependent on Indian entities, Indian conditions. So when I look at all this, the broadest or the most suitable conditions that are impacting the price, that are impacting the costs, that are impacting the operations of TCS is entirely within India, And therefore, we can say that India is the operational country and the functional currency of TCS is India. The functional currency of TCS is Indian rupee, INR. Okay. Anything apart from INR will become a foreign currency. Anything apart from INR will become a foreign currency. So let us look at what is the thing. Emphasis is on the currency that determines the pricing of the transactions rather than the currency in which those transactions are denominated. Let us suppose that TCS received only contracts for entities outside India. So TCS's customers are all located outside India. वो सारे employees India में ही रहेंगे. Okay. And the situation is such that if TCS does not cater, Infosys will cater. As you are aware, India is a back-end office for all the MNCs because we have talented labor and cheap labor. Both are available in India. So therefore, the back-end offices are always India for all the MNCs. So now when TCS has to price its revenues, it has to look at what probable pricing Infosys will follow. So the pricing of TCS of revenues outside India depend on what its competitors within India are charging for a similar contract. And therefore, even though the revenues are denominated in foreign currency, we have to look at what is the factor that is deciding the price of such revenue. Is it the currency inflation of India? Is it the economic conditions of India? Is it the competitors within India? Is it the cost factors within India? If all these conditions are ticked, okay, then you can say that Indian currency is the functional currency for TCS. So we do not look at currency in which those transactions are denominated. ये currency तो irrelevant है. This currency is irrelevant. So when I look at my transactions, I will have to look at that currency which influences sale prices for its goods and services, or the currency of the country whose competitive forces and regulations determine the sale prices. So in this case, we took the example of a tax structure change. We took the example of a competition in the form of Infosys. We took it in the form of influencing sales prices determined by which currency. Okay. And we took into factor the currency that mainly influences labor, material, and other costs. So when all these things, you have to see who is influencing, which entity, which country is influencing, and that country's currency will become the primary indicator, will become the functional currency, Sir, ये तो सीधा सीधा example था. Now I want you to understand with the help of a different example, a slightly complex example. Okay. You are all aware of this company, Emirates. Okay, Emirates is an airline company which is situated in Dubai. Okay. Emirates has a company in India also. It has a subsidiary in India also. Chahiye, because local laws, if you are flying, then you have certain statutory requirements. So Emirates subsidiary is in India also. This is the subsidiary. This is the parent. Okay. Now, you want to fly from Delhi to, where will you fly? Delhi to London. Okay. You want to fly from Delhi to London. And you notice that Emirates is the most suited flights for your timings, your requirements, etc. So you go to Emirates website. You go to Emirates website, www.emirates.com. So when you go to Emirates website.com, the first question that pops up on the Google browser is, do you want to go to the Emirates India website? And you will tick yes, because you are in India. So you will go to the Emirates India website. You are sitting in India and doing the booking. So Emirates India website. And on the Emirates India website, you look at the Delhi to London ticket. You look at Delhi to London tickets. Let us assume that the ticket is priced at 80,537.64 rupees. Rupees 80,537.64. Now, let us move to a similar flight. Let us move to a similar flight on Air India website. On Air India website. This price, I'm keeping it very simple. It is rupees 80,535 rupees. Okay. Priced similarly. So now what I want you to tell me is, although Air India and Dubai will not, Emirates will not have comparable prices, but still I'm making the things a little simple for you to understand. Sir, what is the difference between these two? आप कहना क्या चाहते हो? What I'm trying to tell is, if you go to the website of any company, Indigo, Go Air, Vistara, Air India, Air Asia, you go to the website of any of these companies, your pricing, your prices which will come will always be in whole numbers, will always be in whole numbers. ये पैसे का धंधा हमारे साइट पे नहीं मिलता. You will never get these prices in our sites. Never. You will always get wholesome pricing, because that is what starts to affect us. Sir, तो फिर why does this price come as a decimal for Emirates? This price comes as a decimal for Emirates because the pricing of these flights happens in dirhams. It happens in dirhams, and it is then converted to INR and put on the Indian website. It is then converted to INR and put on the Indian website. Who hosts the Indian website? It is the Indian subsidiary of Emirates. It is the Indian subsidiary of Emirates. So Emirates India, the pricing of its products, is it determined by conditions in India, or is it determined by the conditions in UAE? What do you think? What do you think? This currency, dirhams, which is setting the price of the flight and then converting it into INR. So which factors, which countries' factors are influencing the price of this flight? It's obviously UAE, Dubai's factors which are influencing the pricing of this product. So even now, though the Indian subsidiary of Emirates is located in India, statutory responsibilities are there in India, the pricing of the flights, the pricing of the revenue of the Indian subsidiary is determined based on the factors situated in UAE and not based on the factors existing in India. And therefore, the primary economic environment can be said to be UAE. Can be said to be UAE. हम बैठे, we are seated in India. This is an Indian subsidiary. ROC registration उठा करके देखोगे, it will be somewhere in Mumbai or Delhi. उसका PAN number है. It files its tax returns. It files the GST returns. Everything it does that an Indian company has to do. But the pricing, the economic environment of UAE is what is affecting the pricing of its product. वो India में कभी नहीं देखेगा. Tomorrow, Air India will say, come out with a sale and say that we are pricing it at 60,000 rupees. If Air India comes out with a sale of 60,000 rupees, Indigo, Air Vistara, Go Air and all these flights also will come out with sale within 1 or 2 days. हमेशा से यही हुआ. You would have seen this. The moment an airline comes out with a sale, 2-3 दिन में you are having all the other airlines coming on a sale, because the competitors are influencing the prices of the market in which those entities operate. But when Air India brings down its prices, you will always note that Emirates will never change its prices. Emirates will probably change its prices if its competitor airlines in UAE change their prices, come out with some sale, etc., etc. But if Air India brings down the prices via sale, Emirates will not change its pricing, because its pricing is dependent on the economic factors of UAE. So therefore, though it is a company situated in India, the functional currency of Emirates is going to be dirhams. The functional currency is going to be dirhams. Sir, इससे क्या होगा sir? Sir, functional currency is in dirhams is a huge thing, because you are required by Ind AS 21 to maintain your records, to pass your journal entries, to prepare the financial statements in the functional currency. You are required to identify what is your functional currency, because that is the currency in which you will pass the journal entries. That is the currency in which your first set of financial statements will be prepared. So though this is an Indian subsidiary, it has to present, or it has to have its transactions denominated in dirhams, because its functional currency is dirhams. But sir, ऐसा कैसे हो सकता है? We are having GST department which requires INR. We are having income tax department which requires INR. ROC को भी INR चाहिए. What are you talking about, sir? That becomes a presentation currency. Reporting in INR is merely a statutory obligation for Emirates India. उसके अलावा उसका कोई संबंध नहीं है. There is no relationship absolutely with INR, and therefore we will have to denominate it in a presentation currency, INR. How to convert functional currency to presentation currency is a matter of later discussion. But right now, what it presents, its financial statements in currency. That means if it presents it in Indian currency, it is not functional. It is only what you can say presentation currency. Whereas its actual functional currency is the dirhams. Is it okay? Have you guys understood? Yes. Have you guys understood with the help of these examples? Yes. All clear? Okay. So now moving on to the next part. Sir, suppose, okay, so in this case, let us assume that even employees come from UAE and sit here. Okay. Now we move on to the next one. Suppose this company Emirates, sir, pricing, तो आपने समझा दिया, this is fixed by UAE factors. Okay. But दूसरा factor देखोगे, cost. दूसरा देखोगे cost. So now when you look at cost, UAE will hire Indian employees. UAE will hire Indian staff. UAE will hire Indian manpower contractors. So the price that it has to pay to these people, or rather the amount that it has to pay, the compensation it has to pay, this will be based not on UAE salaries. आप यहाँ बैठे बैठे UAE का salary नहीं मिल सकता है. Okay. It is like saying sitting here, you are building something like a Burj Khalifa at what is the price here itself. Okay. वो तो possible ही नहीं है. That is a structure which is denominated based on the pricing there. Here, if we have to build something, I cannot build it like some skyscraper which I have built it. Okay. I cannot build it. So therefore, my cost of my employees, my cost of my expenses, the cost of anything that I'm using as an input to generate this output is based on local Indian factors. And now there is a tie. Sir, pricing, आप कह रहे हो, you will look at it is influenced by the UAE environment. Cost is influenced by the Indian environment. Sir, ये तो clash हो गया ना? You have a clash here. If there is a clash in the primary indicators, you will then move on to the secondary indicators. What is the secondary indicator? The currency in which funds from financing activities are generated. That means आप पैसा किस currency में उठा रहे हो? In which currency are you raising the funds? Are you raising the funds in INR? Are you raising the funds in dirhams? Are you issuing shares in INR and getting it in INR? Or are you issuing shares in dirhams, getting it in dirhams? Or are you taking a borrowing? So all these items are an indicator, a secondary indicator. If your primary indicators do not give you evidence, you move to the secondary indicator, the currency in which funds from financing activities are generated. So once this is done, you will be able to decide कि भाई मेरा functional currency कौन सा है. Sir, मैंने कोई borrowing नहीं किया, मेरा कुछ भी नहीं है, nothing is there. So if that is the case, you move to the next one, currency in which receipts from operating activities are usually retained. आपके operation से जो पैसा आता है, the funds that you get, Emirates collects the flight ticket costs. Okay. So in what currency does it retain? Does it retain it in INR or does it repatriate it back to UAE in the form of dirhams? कौन से currency में रखेगा वो? So that is something which you will have to look into. Even after this, if there is still a tie, or if it is still inconclusive, then it is a judgment call to say which is your functional currency. Okay. So that is the meaning of functional currency. Very, very vital, very important to understand, because agar yahan pe gadbad ho gaya, if you make a mistake here, your whole reporting is gone for a toss. In this case, the Emirates Indian subsidiary under AS11 would obviously prepare its financial statements in INR, obviously, because the reporting currency was the domestic currency under AS11. Simple. But yahan pe, here in India, you will have to prepare the financial statements in dirhams. You will have to prepare the financials. आपका जो accounting package है, you have your accounting package. It could be SAP, it could be Oracle, it could be Tally, whatever it is. The journal entries in those books of accounts will not be done in INR. It will be done in terms of dirhams. Okay. So the balance sheet that comes from your system, will not be an INR denominated balance sheet. It will be a dirham denominated balance sheet. And once that is done, you will then say, sir, but हमें तो INR balance sheet चाहिए. So if you want an INR balance sheet, you will have to look at the rules for converting your functional currency to the presentation currency. For converting functional currency to the presentation currency. Is it okay? Yes. So the question is where to use the functional currency. Functional currency, see, 99% of the cases, very high probability that your local currency itself is the functional currency. Okay, 99% of the cases. Aisa wala case is very rare. This case is going to be absolutely rare. Is it okay? Have you guys understood so far? Yes, have you understood? Yes. Okay. So now the question now we look at is functional currency determination mandatory? Is functional currency determination mandatory? Answer is yes. The entity needs to determine it. It is not a currency which is given to you. Ind AS ऐसा नहीं बोलता है that where you are situated, that geographical location's currency is your functional currency. No, it does not. The standard tells you have to determine what is your functional currency. आपको समझना पड़ेगा, आपको you will have to work out as to what could be your functional currency. This is not a voluntary choice. This is not a voluntary choice. This is a compulsion. This is a mandatory requirement. You have to determine it. यहाँ पे गड़बड़ हो गया, then your whole reporting goes for a toss. Okay, so this is a mandatory choice. This is a mandatory choice. Okay, all right. So I told you primary indicators, I told you secondary indicators, and then we have seen what goes into identifying a currency as a functional currency. Moving on, I want you to do this illustration 1 for homework. Okay, I'm leaving this for homework. It is basically identifying your functional currency. Okay, it is identifying your functional currency. We will come to foreign operations later towards in the next class. Okay, so don't look at this slide. I'm not running away. Okay, I want you to do illustration 3 also for homework. And I want you to do illustration 4 also for homework. It's largely theory. Okay, kuch hai hi nahi, kahin pe numbers only are not there. So because there are no numbers, I want you to do these questions and try to understand what is the functional currency. What is the functional currency? Okay. When the above indicators are mixed, I gave you the example. Emirates revenue comes in dirhams, but costs are based on the Indian, what you can say, costs are based on Indian indicators. So functional currency is not obvious. Then the management will be required to use its judgment to determine the functional currency that most faithfully represents economic effects of underlying transactions, events, and conditions. Okay, so management has to give priority to the primary indicators. Give priority to the primary indicators. Then you move on to the secondary indicators. Then you move on to the other indicators, which are designed to provide additional supporting evidence to determine an entity's functional currency. To determine an entity's functional currency. If the currency has moved adversely with respect to the reporting entity, you could probably consider the risk of a management bias when doing the audit under SA 315. So suppose you are an entity whose raw materials you are going to import, always. And your sale is within India. All of us know that India has weakened compared to the dollar in the recent couple of months. So I'm having two entities. First is A Limited, export oriented. I'm having B Limited, import. This buys the goods and sells them within India. So it's only import oriented. So now, because of the rising price of the dollar, my import costs start getting higher. My import of goods starts to increase drastically. So therefore, B Limited will say, yeah, if I keep INR as my functional currency, then I'm surely going to make a huge loss. इससे अच्छा, let me create documentation to show that USD is my functional currency. And once I do that, जो भी मैंने रुपीस में इनकर किया है, I can easily convert it to dollars. वो कम डॉलर में आएगा because dollar rate is high, because the dollar is at an all-time high, and therefore the management will be tempted to say that USD is the functional currency. USD is the functional currency. This is what the management will obviously try to move towards. So as an auditor, you have to be very careful when you are doing the audit. There is always a risk of management bias in such kind of judgment requirements. Okay, there is always a case of management bias. Is it okay? Yes. Have you understood? All right. Okay. So why do I need my functional currency? It measures its assets, liabilities, equity, income, expenses. Everything is measured in the functional currency. In other words, the journal entries are passed in the functional currency. The journal entries come in your functional currency. An entity's functional currency reflects the underlying transactions, events, and conditions relevant to it. Once determined, the functional currency is not changed unless there is a change in those underlying transactions, events, and conditions. So typically, एक बार मैंने functional currency determine किया है, thereafter I will not change. Functional currency is not changed unless there is a change in the underlying transactions, events, and conditions. If the entity, okay, so you don't have a hyperinflationary economy. Okay, so is this okay? Yes, everything about functional currency, is it clear? Anybody has any doubts? Generally, it cannot. In rare cases, you can alter the functional currency. Okay, you can alter. Okay, but 99% एक बार जो मैंने decide कर लिया कि भाई what is my functional currency, उसके बाद I cannot change it unless there is a change, there is a fundamental change in the factors that determine my cost, factors that determine my selling price. Okay, so this is generally a one-time exercise. Okay, all right, fine, clear, everyone? Yes, done. Yes. Okay. Okay, so now what do you understand by presentation currency? Presentation currency क्या है? It is the currency in which the financial statements are presented. The currency in which the financial statements are presented. Entity can select any presentation currency. This is a selection. It is a voluntary choice. Presentation currency is your choice. Okay. Ind AS 21 does not say anything about that. अब चाहो तो बनाओ, ना चाहो तो मत बनाओ. Okay. Okay. So what are the factors? Well, it depends which country is affecting your same factors, Manini. It's the same factors. Right now, India may be affecting your sales. Tomorrow, you may have USA affecting your sales. You may have the, since we have moved from, what you can say, we have moved across boundaries, particularly after the pandemic. You would be having a case where your entity's costs, your entity's revenues could be determined or influenced by the factors located in a country away, far away from your home country. For example, hypothetically, you were owning Zoom. Let us take into consideration pre-pandemic, and Zoom you were holding, which had only Indian employees, Indian technology, Indian servers, everything. But it was not a great app until when the pandemic came. And once the pandemic came, you had to fire out your employees. But the US market saw a great deal in your great potential in Zoom app, and therefore you got contacts from there. So those factors have influenced the pricing of Zoom, and the content managers, the software managers, software developers, everybody is from there. So the salaries are paid from there, but the company is domiciled in India. So pre-pandemic, Indian factors determine the prices. Post-pandemic, it is US factors. So there is a change. There is a change in which your economic factors influencing the price and the costs are changing. That is a huge shift. That is a radical shift. So there it becomes as if your functional currency has changed. Your functional currency has changed. Okay. Whereas presentation currency is just a voluntary choice. You can select any presentation currency. So for example, you have an Indian entity. It is entering into a transaction to sell goods and receive the amount in euros. To sell goods, that is export, and receive the amount in euros. So that shows us what is a functional currency. Indian entity may invoice the product in euros. But the collection that will happen, it will be retained in INR. So functional currency becomes and is INR. But suppose this Indian entity is a subsidiary of a US parent. If that is the case, then you will have to convert your financial statements into dollars and share it. You will have to convert it into what you can say dollars and share it. That becomes merely a presentation currency. Okay, so that takes care of functional as well as presentation currency. Okay, we'll look at the conversion details later on. But this is what it is all about. All well, everyone? All well? Yes. All well? Just give me a minute. Okay, so sorry for that. Okay, now we move on to the next part. So first part of our discussion is done. That is types of currency. So we have now seen functional currency. We have now seen presentation currency, and foreign currency is any currency other than your functional currency. Okay, so these are the three types of currencies which we have seen. What goes into determining what are the key factors, primary factors? If primary factors give do not give a decision, then you move on to the secondary factors. All of that is what we have now seen. Okay. Conversion reporting, will come to that later. Okay, coming to the next aspect, the next one is what you are already aware of, that is foreign currency transactions. Okay, foreign currency transaction means a transaction which is denominated matlab invoice किस में आता है. Okay, it could be a sale invoice, it could be a what you can say purchase invoice, whatever it is denominated in, or it requires settlement in a foreign currency. So what is a foreign currency? Currency other than the functional currency of the reporting entity. Very simple, just like what you used to do in AS11, nothing else. Okay, so foreign currency transaction includes cases where an entity buys or sells goods or services, borrows or lends funds, otherwise acquires or disposes of assets. All of these transactions happens in a foreign currency, आप लोग already कर चुके हो, you've already done this. So we will see how it's recorded. Rules are the same what you studied in AS11, no change in that. Okay, foreign currency transaction, that means it could either be sale or purchase or borrowing or repayment or selling of an asset, whatever it is. It shall first be recorded on initial recognition. In which currency? In the functional currency, by applying the spot exchange rate, at the date of the transaction, yahi karta tha, we had studied this only on the date of purchase, on the date of sale, on the date of the transaction. What is the exchange rate prevailing between the foreign currency and the functional currency is what you will have to record the transaction at, Okay, so date of transaction typically will be the date when the transaction first qualifies for recognition. Okay, approximation, you could be using an average rate also. For a week or a month also you could use the average rates. But if the rates fluctuate significantly, usage of an average rate is inappropriate. Are you able to recollect AS11? Yes, yahi tha. It was exactly the same. Nothing was different. Yes, everything was same as far as initial recognition is concerned. Subsequently, at each balance sheet date, you will have to split the items into monetary items, non-monetary items. This also was there in AS11. Monetary items, you will have to translate it using the closing rate. Monetary items means items which are convertible into known amounts of cash. For example, debtors, creditors, loans. Okay, all these are going to be what you can say monetary items. So you will have to convert them using the closing rate. If you look at non-monetary items, fixed assets, inventory, ROU assets, etc., you will have to measure these at historical cost. If you are following cost model, then translate as at the date of the transaction. That is, no restatement will be done. Okay, so jo pehla din ka rate tha, the same rate continues even after a couple of time has lapsed. The same cost will continue. However, if you follow the fair value model, you will translate using exchange rate at the date when the fair value was measured. So it's exactly what you used to do in AS11. Yes, are you able to follow? So I'm going a little fast in that regard. Okay, I'm going a little fast because it is fairly simple. Okay, it is fairly simple. All right, now we move on to some questions. Okay, let us move on to some questions. Though line ke sab questions hai, but since you have you have these questions in your study module, we will look at these questions. Okay, all right. On 1st January, P purchases a machine for 2 lakhs. Okay, so we'll just write the facts here. ये सब study module का question है. Okay. Amount, rate, date of purchase, 1120x1 for $2 lakh. Okay, and on that date, what is the rate? At that date, the exchange rate was $1 equals rupees 68. Rupees 68 per dollar. Rupees 68 per dollar. Okay. Next. What is your reporting date? Year ended 31st March 20x1. March 20x1. And settlement date. Have they given the settlement date? P is not required to pay until 30th June. So settlement date is 20x1. Okay. The exchange rate was $1 equals 65. Whereas in the reporting date, 1 second, what is 65? Sorry. This is as on 31st March. Okay. All right, fine. So now the question is, how do we do the accounting? Now the question is, how do we do the accounting? So ideally, the entry that you should be passing is 1st of Jan. Machinery has come. So machinery account debit to creditors. To creditors. This will be 200,000 into the rate on the date of the transaction. So 2 lakh into 68. So that gives you 136 lakhs. Okay, this is 1 crore 36 lakhs is the initial recognition. After that, can I change the value of machinery? Answer is no, because machinery is not, I repeat, is not a monetary asset. But are my creditors monetary assets? Yes, monetary liabilities. So you will have to do a restatement. Yes. So the restatement will happen on 31st March 20x1. 31st March 20x1. Okay. On this date, your creditors, your exchange rate is 65. You had booked it at 68. So your creditors will drop down by 3 rupees per dollar, and this will give rise to an exchange gain. So creditors account debit to forex gain, P&L. Okay. P&L. So now how do we record this? You had your liability at rupees 68 per dollar. The fresh rate is 65 per dollar. Okay, so 68 minus 65 into 2 lakhs. So this gives you how much? A gain of 6 lakhs. Gain of 6 lakhs. Okay, so you will now state your creditors at 1 crore 36 minus 6 lakhs. 1 crore 30 lakhs. 1 crore 30 lakhs. Okay. What about the machinery? You will depreciate the machinery. Sir, should I restate it? Answer is no. There is no need to restate it. So what is the life of the machinery? Well, the life of the machinery is purchased a machinery, functional currency was this thing in rupees. At that date, exchange rate was so much, rupees not. Feels that these exchange fluctuations. He also feels that P Limited depreciates the machinery over 4 years. So 4-year depreciation. So this is going to be yes. So depreciation debit to machinery. Depreciation debit to machinery. Okay. So this is going to be yes, divided by 4 years into 3 by 12. So that comes to how much? 34 lakhs into 3 by 12. 8,50,000. 8,50,000. Done? Yes. All done? Everyone, Sumit, Viraj, Sanjay, Shailendra, if you are there, Soham, Manini, Rashmi, Ankur, sab samjha? Done, sir. Okay, fine. So that takes care of this question. No difficulties here. Let us then move on to the other set. Okay, to the other set of foreign currency transactions. Okay, see, many times what happens is in Ind AS we are finalizing the amounts by comparing two or more amounts. We are finalizing what should go in the balance sheet by comparing two or more amounts. Sir, example dijiye. Inventories, lower of cost and net realizable value. That means you need to identify the cost also, you need to identify the NRV also. Okay. Similarly with impairment, we measure it at lower of carrying amount before considering possible impairment, and you also look at depreciation on full value. That is the initial value only, no, Shailendra. Depreciation will be taken on full value. 1 crore 36 lakhs. That is the only value which is there. Yes, you do not restate your machineries at each balance sheet date because machinery is not a monetary item. It is a non-monetary item. Okay. All right. So lower of cost. So coming back to our discussion, we are having certain amounts where the final amount is based on comparison of two or more amounts, like inventories, cost or NRV, whichever is less. So we measure the cost also, the NRV also. Impairment indication assets, carrying amount before impairment versus recoverable amount. So these are the things we do. These are some of the examples. So when you have to record this, when you have to record this, what is the process which is going to be used? The process is, first thing is, you compute the cost. You compute the cost or the carrying amount of assets translated at the exchange rate at the date when that amount was determined. Translated at the exchange rate at the date when that amount was determined. Okay. सबसे पहले don't jump into giving the effects of impairment or giving the effects for change in the what you can say cost and NRV calculations. Don't jump to give the impact for that. Okay. You will compute the NRV of the recoverable amount of assets based on the closing rate, based on the closing rate. So first thing is convert to INR, convert to INR, and then you compute the NRV, and then you compute the NRV. And finally, step 3, carrying amount is going to be least of step 1 and step 2. Basically what it is saying is, सबसे पहले convert it to functional currency, then you do the NRV testing, then you do the impairment testing. You will accordingly be able to get the answer. You will accordingly be able to get the answer. Okay. Don't first give the effects for impairment or NRV, whatever it is, and then do the conversion. No, that is prohibited. That is prohibited. You will have to first do the conversion to INR or functional currency. Then you look at NRV testing or impairment testing, and then take the entry in the journal, and then take the entry in the journal. Okay. So now coming back to the question sets that we have, coming back to the question sets that we have. Okay. Here also we are having a similar, sorry, this is a revaluation case, I think so. Yeah. Okay, fine. Okay. Before that, we just take this question, example 1. An entity purchases an item of property, plant and equipment amounting to 2 lakh euros on 1st April 20x1. The exchange rate on the date of acquisition was 1 euro equals rupees 52. Owing to technological obsolescence, the management, as a part of impairment testing, estimated the recoverable amount of the asset to be 1,75,000 euros. Exchange rate was 1 euro equals rupees 60. Discuss the implications of the above in line with the relevant standard. Would your answer change if the recoverable amount of the asset was estimated as 1,50,000 euros? Remaining, exchange rate remaining 1 euro equals 60 rupees. Okay. What I want you to do is quickly try this question. Quickly try this question. Okay. Quickly try this question. Try this question. It should not take much time. I'll give you 5 minutes. Okay. Yes. Any answers? What is the impairment loss in the first case? What is the impairment loss in the second case? Yes. Okay. See, let us understand the question. क्या कह रहा है 2 lakh euros at rupees 52. Carrying amount. Two lakhs into 52. So this comes to 104 lakhs. Recoverable amount. Euro 1,75,000. But on this date, it is worth 60 rupees. So 1,75,000 into 60. 105 lakhs. The question is, sir, if I look at this, there is an impairment of 25,000. If I look at this, there is an impairment of 25,000. But if I look at the rupee, this thing, rupee amounts, there is no increase. There is no increase. And therefore, because there is no increase, no impairment. No impairment. Is it okay? Yes. Have you understood this? Ideally, there would have been a 25,000 euros ka impairment. But since the INR values are not reducing, so therefore there is no impairment. Is it okay? Yes. Done. Done. All clear. Viraj, please confirm. Sanjay, please confirm. Shailendra, please confirm. So when you are comparing two or more items for NRV impairment testing or whatever it is, yes, you will have to ask them for whether there is an impairment after conversion. Don't base your impairment in the what you can say based on the currency movement, based on the foreign currency movement. You will have to convert it and then take a call Okay. So that takes care of comparing two or more values. So this example also we have solved for you. Yes. We have solved this example also for you. Coming to the next set of examples. Okay, fine. Now the question is, sir, in what you can say AS, in AS, हमारे पास other comprehensive income is also there, and we are also having profit and loss. So where do I book my exchange gain or loss? You will book the exchange gain or loss in that part of the P&L where the actual what you can say, where the actual booking takes place. Okay, like for example, if there is a revaluation of machinery, then the revaluation of machinery is going to revaluation reserve through other comprehensive income. So any what you can say foreign currency gain or loss that happens on account of say revaluation will be routed through other comprehensive income, will be routed through. Okay, yes, sorry, I did not see the second case. Yes, my mistake. Okay, would your answer change if the recoverable amount of the asset was estimated? Yes. So now suppose I make the recoverable amount as 1,50,000 into 60. So this gives me 90 lakhs. So therefore, your impairment loss is going to be how much? Your impairment loss will be 14 lakhs. Rupees 14 lakhs. All right. So that takes care of that question entirely. Okay. All right. Next. Let's move on to the next one. Okay, so where am I going to record this? Well, the place where the original transaction was recorded. So if it was in the P&L, exchange gain or loss will go in the P&L. If it was in other comprehensive income, you will record it in other comprehensive income, so on and so forth. Okay, so that takes care of that part. So we look at a question on these lines. Okay, on 30th January 20x1, A Limited purchased a machinery for $5,000 from a USA supplier on a credit basis. Okay. A Limited's functional currency is rupees. This is given to you. Yes. The exchange rate on the date of transaction is $1 equals 60 rupees. The fair value of the machinery as on 31st March X1 is 5,500. The exchange rate on 31st March 20x1 is $1 equals 65. The payment to overseas supplier done on 31st March X2 and the exchange rate on 31st March X2 is $1 equals rupees 67. The fair value of the plant and machinery remain unchanged for the year ended 31st March 20x2. Prepare the journal entries for the year ended 31st March X1 and X2 according to Ind AS 21. Tax rate is 30%. A Limited follows revaluation model in respect of plant and machinery. Okay. All right. Fine. So let us record the transactions first so we don't have to visit them. Rate. Date of purchase of machinery. This is on 30th January X1. 20x1. So this is how much? amount is $5,000. Okay, next. Okay. Next. This is the fair value. Next one is another closing date. Okay, all right. So this is the data which is there. Creditors paid on 31st March X2. Okay. So that takes care of the question. Now we proceed to start. Okay. So first thing is purchase of machinery. 30th January 20X1. $5,000 into rupees 60. So that comes to 33 lakhs. Next, 31st March X1 Forex fluctuation, 60 became 65. So your liability increased. So that is going to be a, what you can say, 60 becoming 65, liability increases. It is an exchange loss. Forex loss P&L debit to creditors. So this is 5,000 into 25,000. Done. So far, is it okay? Yes. So far, is it fine? Done. Okay, fine. Next. On 31st March 20X1, you are having a fair valuation done. 5,000 asset has become 5,500. 5,000 asset has become 5,500. So you are having what you can say, Fair valuation 5,500. So machinery account debit. Now it starts to get a little interesting. Okay. See, machinery was appearing at 5,000 on the date of acquisition. Now this machinery itself is getting revalued. Okay. This machinery is getting revalued on 31st March 20X1. Okay. Because of that revaluation, it has gone up to what you can say, because of that revaluation, there is a 5,000, it's 500 USD positive impact. There is a 500 USD positive impact, which we will have to take to the asset. The question is, where will I give the credit? Can I give the credit to the P&L? Answer is no, because this is an item that goes to revaluation reserve to other comprehensive income. So we will take this also there only. Okay. So to revaluation reserve, other comprehensive income. So this is my asset is revalued at 5,500, but actually it was only 5,000, and this I will multiply it with 60 per dollar. This I will multiply it with 60 per dollar. So 500 into 60, this comes to 30,000. Is this part okay, everyone? Is this part okay? Increase in value, is it okay? Yes. Yes. And finally, to forex gain. How do I record it? 5,500 into 5,500 into, on the date of revaluation it was 65, before that it was 60. So 65 minus 60, 5 plus 5,500 multiplied by that. So this comes to 27,500. This comes to 27,500. Sumit, 65, the movement is foreign forex gain, foreign currency gain. Okay. So we have recorded that separately. It's already explained. Okay. 57,500. Is this okay? Yes. I hope you understood why not 65 now, Sumit. वो already दूसरे जगह पे include हो चुका है. Is it okay? We are basically splitting the gain into two parts. The first part is the revaluation reserve, where the movement goes to reval reserve. The second one is we are taking the closing rate. But if you look at the standard, what it is telling, see, look at the translation details. If the non-monetary asset is measured at fair value, you will be translating using exchange rate at the date when the fair value was measured. You will be translating using exchange rate at the date when the fair value was measured. The fair value was measured in our case on 31st March X1. So that is why we have taken this 65 here. That is why we have taken this 65 here. Okay. Is it fine? Rashmi, did you follow? So The movement in values without movement in exchange rate, that goes to reval reserve OCI, whereas the movement in exchange rate goes in your foreign currency gain. This is not, I repeat, the second part, this 27,500, this is not on account of translation to closing rate. This is on account of revaluation. On the date of revaluation, the prevailing rate was 65. That was taken to, and therefore you got 27,500. Achha. Alternatively, you could also get 57,500 as 5,500 into rupees 65 per dollar. So this gives you how much? This gives you rupees 3,57,000. This is 3,57,000. And you had recorded initially at 3 lakhs. So 57,000 was your gain. Okay. This was your gain. You could cross check it. Okay. 57,500. Okay. Done. Yes. Revaluation will obviously be as per non-monetary initial rate. Yes. Done. So now moving on to the next one. For now, you can just write this entry, which I'm telling you. I'll not sit to explain. This is because they have given us the tax rate. This is because they have given us the tax rate to be 30%. So for now, just copy this entry and write it down. We will see the rationale in the next standard Ind AS 12. Okay. So 31st March 20 X 1. Revaluation reserve, OCI debit, to deferred tax liabilities, 17,250. How did I get? Well, 57,500 into 30%. 17,250. Why is it a deferred tax liability? Why it is not an asset? All these things we will discuss in the next class. Okay, in the next class. Okay, that is coming Tuesday. But until then, just record this entry and keep it. Okay. Fine. Yes. Have you noted down all the entries? Have you noted down all the entries? Yes. Okay, done. All right. Now what it is saying, the payment is happening. When is the payment happening? 31st March 20x2. The payment is happening. So first is we will do the payment. 31st March x1 tak to everything is done. So 31st March x2 we will do the payment. So the entry for the payment will be creditors debit 3 lakh creditors plus 25,000. 3,25,000. To bank, your creditors are worth 5,000. On the date of payment, the exchange rate is 67. Okay. Three lakh 35,000. Okay. 10,000. This is Forex loss. Acha, can I calculate this? Obviously you can. Your creditors were 5,000 into initial rate was 65 and now it is 67. Yes. So you can choose to take this as the balancing figure, or even if you don't take it as a balancing figure, you can always catch the. Okay. So creditors account debit to bank Forex loss. Okay. So $5,000. Now that takes care of the payment of creditors. That takes care of the payments for creditors. Yes. Moving on to the next part. Moving on to the next this thing. The fair value of the machinery remains unchanged for the year ended 31st March X2. And here it is the students get confused here. Here is the place where students get confused. They say that as on 31st March X1, we had done a fair valuation and the fair valuation returned figures of 5,500. On 31st March X2, we again do the recording. We again do the fair valuation, but this time the fair valuation is at 5,500, which is the same as it was on 31st March X1, and therefore we will not pass any entry. This is incorrect. This is incorrect. On 31st March X1, there was a fair valuation. On 31st March X2, there is again a fair valuation. And when there is again a fair valuation, you will have to do the valuation based on the exchange rate prevailing on the date of fair valuation, which in this case happens to be 31st March 20X2. So in terms of revaluation reserve movement, it is zero because the value is the same. But in terms of Forex gain that will accrue, there will be an entry. There will be an entry because you have actually done a fair valuation on 31st March 20X2. Is it okay? Yes. So therefore, it is not exchange rate change. So do not get confused by saying that sir is treating plant and machinery as a monetary item. No. I am treating it based on the exchange rate on the date of fair valuation, which is the condition existing for translating assets and liabilities. So I translate assets, I translate those assets and liabilities which are non-monetary and which are being recorded using the fair valuation model at the rate on the date of fair valuation. So therefore, the entry that you will pass on 31st March X2 is machinery account debit to revaluation reserve. OCI. How do I record this? Well, initially the value was 5,500. Then also it remained 5,500 into rupees 65. So obviously this is going to be 0. This is going to be 0. But will I have forex gain? You will be having forex gain, foreign currency gain. How do I record this? Well, this will be 5,500 into 69 minus 67. Correct? 69 67 minus 65. So this gives you 11,000. This gives you 11,000. Machinery account debited will be 11,000. Machinery account debited will be 11,000. Alternatively, how could you calculate? Well, take $5,500 into 67 per dollar. So that comes to how much? $368,500. Previously recorded $3,57,500. So that comes to 11,000 gain. Okay. So this is how the accounting will happen. Okay. All right. Sir, so in fair valuation model, the asset value will change or not? Treatment for changes in rate is to be given each financial year. Okay. All right. Fine. Again, let us understand. Please pay attention carefully. I purchased the asset initially for 5,000 when the exchange rate was 60. So 5,000 into 60, I have done the accounting here. Okay. So this accounting is done. Okay. There should be no doubt here. There should be no doubt here. Yes. So this is clear. We move to the next one. 31st March X1. We are having restatement of creditors. So creditors, the rate went from 60 to 65. So we are having forex loss, which gets recorded in the profit and loss. Okay. So that comes to 5,000 into 5, 25,000. So forex loss also you would have understood. Okay. Now we move on to the next one. We have done a fair valuation. We have done a fair valuation, 5,500. So first thing, the machine was worth 5,000 initially. It went up to 5,500. So 5,500 minus 5,000. This is the revaluation. This is the revaluation. Multiply it by which rate? Well, this I am going to multiply it by the original rate. Why original rate? Because I want to see how much of the increase in value is attributable to revaluation, how much of it is attributable to currency fluctuation. And therefore, into 60, we take 30,000 to revaluation reserve. Because of increase in foreign currency fluctuation, where do I take that? That also I will take it to foreign currency gain, which will, my friends, go to other comprehensive income, because originally the revaluation went to other comprehensive income. So this also will be going to other comprehensive income. So is it okay till now? Yes. I cannot record 57,500 entirely here, because I want to see the breakup. I want to see the breakup. Okay, so इसके लिए वो पूरा का पूरा 57,500 is split into 30,000 on account of revaluation, 27,500 on account of foreign currency fluctuation. Okay, I am following the principles of non-monetary item translations, which are measured at fair value. Okay, so this is the first part. Okay, coming to the next one, 31st March X1. This one is a DTL adjustment. So right now, don't break your head on this. Okay, right now don't break your head on this. Abhi ke liye isko chhod do. Okay, so now moving to the next part. Creditors are being paid off. So when they are paid off, the rate is 67. Yes, so therefore the entry that you are going to pass is 67 minus 65. You will be paying 67. So 5,000 into 67. Creditors were appearing at 3,25,000. The difference goes to your forex loss. Okay. Now we move on to the next one. Again, there is a fair valuation. Coincidentally, the fair valuation that has happened is the same as it was an year ago. Ideally, hona nahi chahiye. You have to do a fair valuation only when there is a change in the value. But yahan pe the institute is not trying to explain Ind AS 16. It is trying to ensure you understand Ind AS 21 concept. So therefore, it tells us that machinery account debit to revaluation reserve other comprehensive income. There is no change. 5,500 पहले से था, 5,500 अभी भी है. So there is no change in this value, in this revaluation, and therefore nothing will go to the revaluation reserve. It will be zero. Is it okay? Yes. Coming to the last one, to foreign currency gain. See, did I do a revaluation on 31st March X1? Yes. Did I do a revaluation on 31st March X2? Yes. Non-monetary items following fair value for accounting will have to record these items at the rate on the date when the fair valuation was done. So fair valuation was done at 67 vis-a-vis 65 it was earlier, into 5,500. So that gives you your option. Is it okay? Yes. Have you understood? That gives you your foreign currency gain option. Is it okay? Yes. Alternatively, I could do this entry and get at 11,000. Is it okay now, Manini? Any doubts? Is it okay? Please confirm. Is it okay? All right. I'll tell you, students get confused. Okay. What I'll do is, let me see. This is which question of the study mat? One second. Question 4. Okay, test your knowledge का question है ये. See, this was the first entry we passed. It is the same question. This is the solutions given by the institute. So this was the first entry which was passed. Second entry which was passed, 25,000. Machinery to revaluation surplus, 30,000. Okay. And then this we did 11,000 shown separately here. Now this entry is correct. I'm not doubting it. But what happens tomorrow when you do a self-study? Tomorrow when you start to revise and you look at this entry, आपको confusion होगा. The confusion will be that, sir, creditors also you have taken similar step. You have seen here, कहाँ गया? 65 minus 60 into 5,000. Creditors same case was done. Here also you are taking 67 minus 65 into 5,500 and crediting it to revaluation surplus. So here what will happen is you will end up getting confused. You will ask that, sir, machinery is a non-monetary asset, ऐसा sir ने बताया था. But यहाँ पे we are changing it on the closing rate and recording it in revaluation surplus. It will not strike to you. It will not strike to you that this is a revaluation on account of fair valuation. The first thing which will strike to you here is we are treating machinery as a monetary asset and doing the restatement. So this is what you are going to misinterpret, and that is why we are just segregating in this presentation. Ultimately, this 11,000 very much goes into your revaluation reserve only. It ultimately goes to your other comprehensive income because the gain that had happened is also recorded in revaluation reserve. It is due to revaluation reserve. See, it's not crediting foreign currency gain. It is foreign currency gain which is recognized in other comprehensive income, which is recognized in other comprehensive income, not in the P&L. Even the original one was in OCI, 27,500. This is also in OCI. That means in the revaluation reserve only, because this is pursuant to a revaluation under Ind AS 16. See, if I have a movement, I will record the other effects of that movement in the place where the original movement was recorded. Initially revaluation हुआ था asset का, the revaluation was recorded in reval reserve through OCI. The forex gain also is recorded in the reval reserve through OCI. Okay. In the second case also, there was a movement through reval reserve. Unfortunately, the values have not changed. So that is why reval reserve came 0. So therefore, the forex gain is just segregated in my presentation and shown separately. Okay. Coming to the next one, sir, if the same is on cost model, if it was on cost model, तब तो कुछ करना ही नहीं था. You would not be doing anything, neither this revaluation reserve nor a foreign currency gain. You would straight away have your machinery at every year appearing at 3 lakh rupees. That's it. That's it. Nothing else. You would have your machinery. Once you have recorded at 3 lakhs, it would appear at 3 lakhs throughout. No further entry would be needed if it was at cost model. You would only have, this is what we would have done. This is what we would have done. Cost model is the previous question which we did. Machinery 1 crore 36 lakhs. And then we depreciated that machinery. Okay. Only restatement that happened was of creditors, because creditors was a monetary item, but machinery is a non-monetary item. So I cannot do the restatement on 31st March. Okay. So that takes care of this part. Yes. Reval reserve. Okay. And finally, one entry is remaining, which is the tax impact. Abhi ke liye you just pass the entry and keep revaluation reserve debit to deferred tax liability 3,300. 11,000 into 30%. Manini, is it clear? I am writing forex gain, but that is for you to understand that the movement of 11,000 is forex gain. Okay. It will go to revaluation reserve in the other comprehensive income only. Okay. So that is why don't get confused. Okay. On the second payment entry, why not take 5,500? Shailendra, Revaluation तो आपका exercise है ना. Why your creditor is going to be affected with that? Is the creditor giving you a revaluation service for which he is charging 500? No, na. Creditor ने आपको 5,000 का asset दिया. That 5,000 liability due to the creditor is what you are going to repay. So therefore 5,000 ही आएगा ना. You cannot say I will pay 5,500 because the value of my asset is 5,500. अरे, today you buy a property and you make the payment now, or you make the payment after 10 years, but agreement is there now. After 10 years, whatever is the fair value, will you pay that, or agreed amount you will pay? Obviously agreed amount, which in our example is 5,000, not 5,500. Okay, invoiced value is 5,000, तो आपको invoiced value का ही payment करना पड़ेगा. Yes, so that takes care of this part. Yes, are you totally clear about Forex, foreign currency transactions? Are you totally clear? Yes. Any doubts? No doubts? Sumit Jain, Aniket Jain, Viraj Desai. Achha, Viraj had asked a question. Sir, we are not writing narrations. I am not writing because if I start to write narrations, it will take a lot of time. Okay, it's mandatory to write narrations in the examination. Please write the narrations and come. Okay, please write the narrations and come. Okay, so that is why I am not writing. So Viraj, is it clear? Rashmi, is it clear? Sanjay Pal, is it clear? Sumit Jain, Manini, Rashmi, Ankur Handa, is it clear? Yes, all clear. Okay, fine, excellent. So now we move on to the next one. See, I'll be leaving you guys a little early. Okay, so what I'll do is I'll cover one more question, which is an important one, and then we'll end the session. Okay, it's important. It has come in your RTP and ये favorite रह सकता है exam के लिए. Okay, all right. Okay, before I start that question, see, if you remember AS11, foreign currency gain or loss arising on borrowings taken to purchase an asset. Okay, so let me write it down. You have an asset. To finance the asset, you have taken an external commercial borrowing. Okay, so you have recorded asset in rupees. This is in dollars. In AS11, I think it is para 46, para 46A. The exchange gains or losses, exchange gain or loss on translation of external commercial borrowings would be capitalized at the option of the borrower. आपको याद है, do you remember you used to do something like this in AS11? Yes. It was a one-time option that had to be taken, and once that was taken, all the exchange currency fluctuations that used to happen on account of the external commercial borrowings, that would get capitalized into the cost of the asset. This was the option. This was the option that was available. It was an option. It was not mandatory. Why did they come out with this? Because in between, the currency fluctuated so adversely that companies who had taken external borrowings to finance their asset acquisitions, they said, sir, this is not in our hands. Our results will go for a complete toss if we record this exchange fluctuations in our P&L. Give us an option to capitalize, and MCA gave you the option to capitalize. But it was an option. You could obviously follow the case where you would still take the exchange gain or loss to the profit and loss. This option is not there in Ind AS. This option is not there in Ind AS 21. Ind AS 21 bolta hai, if you have taken an external commercial borrowing to finance an asset purchase, all the movements in exchange on account of currency fluctuations in the external commercial borrowings will be compulsorily taken to the P&L. It cannot be capitalized. So mandatorily take exchange fluctuations on external commercial borrowings to P&L only. No capitalization option is permitted. No capitalization is permitted. Okay. Please put this in your head. Please put this thing in your head. Okay. Because it's very important, very crucial that you know this, that you understand this. Okay. Any exchange, your job is quite easy. In fact, okay. Asset purchase kiya, it will remain at the same value unless you're following reval model. If you follow reval model, then the date on the revaluation, what is prevailing, that date will be the rate taken to record the value of your asset, with the movement being taken to revaluation reserve. Okay. So this is how you are going to do it. Whereas any gain or loss relating to the external commercial borrowings taken to finance the acquisition of an asset will be mandatorily taken to the P&L, expensed to the P&L. No capitalization is permitted. No capitalization is permitted. Okay, so that takes care of everything I had to discuss about assets accounting. Okay, now we come to the next part. That is Ind AS. Okay, Ind AS 21 with Ind AS 109. Okay, all right. You take a quick 5-minute break. Okay, take a quick 5-minute break. It's 9:02, preferably by 9:05, 9:06 we resume. Because it is 109, I thought I'll give you guys a break, because you know you need to be fresh for this. Okay, so take a 5-minute break. Daud ke jao, bhag ke aao. Okay, and we will continue with this. Okay, jaldi se. Okay, take a break and come back. Okay, fine. All right. So just welcome back. So we start with the application of Ind AS 21 with Ind AS 109. Okay. So let us first directly start with an example. Then we will see whether we need to write any theory for this or not. Okay. Mark this particular point as very important. And this is the last thing that we will be doing on foreign currency transactions. Then everything is in place for you. You know all the things, whatever these 2 points. One is revaluation of fixed assets and the other is Ind AS 21 with Ind AS 109. Ye those special points hai. Then we are done. On Saturday we can take only foreign currency operations, subsidiaries, consolidation and close it. Okay. So now coming to the question. Okay. This was asked in your RTP, so it's an important one. On 1st April 20X1, Makers Limited raised a long-term loan from foreign investors. Investors subscribed for 6 million foreign currency loan notes at par. It incurred incremental issue costs of foreign currency 200,000. Okay. So now you are more knowledgeable than me in Ind AS 109, genuinely speaking. Okay. So when I talk about foreign currency, initial recognition. Initial recognition. आप तो अभी पढ़े हो. Okay. So initial recognition in foreign currency terms. How will I recognize the loan? Will I recognize it at 60 lakhs? The 6 million, that is 60 lakhs. Answer is no. I have to deduct transaction costs to get something known as net proceeds. To get something known as net proceeds. So this is 60 lakhs or 6 million minus 2 million. So this gives you 58 lakhs. Do you guys remember this? Do you guys remember this? Yes. Ind AS 109, recording it at the net proceeds. Recording it at the net proceeds. Okay. That is why you will be having something known as effective interest, which you will apply to record the transaction. Okay. So you will initially recognize the loan at foreign currency 58 lakhs. But wait a minute, sir. हम तो Indian books में maintain कर रहे हैं ना, because our functional currency is Indian. Correct. So therefore, when you raise it on 1st April 20X1, you will then convert it using the relevant exchange rate of 2.5. At what rate? Sir, I will convert it at the rate on the date of the transaction. So the INR value of this will be at exchange rate on the date of the transaction. On the date of the transaction. Okay, sir. Done. So that comes to how much? That is on 1420X1, 2.5 per foreign currency. Rupees 2.5 per unit of foreign currency. So this is equal to foreign currency 58 lakhs into 2.5 per foreign currency. That comes to rupees 1,45 lakhs. Okay. So you will be recording this transaction. You will be recording this transaction on 1st April by passing the entry bank account debit to external commercial borrowings 1,45 lakhs. Okay. So this is how you will do it. Okay. Then आपको याद है you used to do something known as an amortization table. You would do something known as an amortization table. year opening interest. This will be which interest? This will be the effective rate of interest. Then cash flow. This will be which interest? This will be the coupon rate. And then you are having closing liability. So what is your effective rate of interest? Have they given to you? Yes. The loan is repayable on 31st March X7 at a premium. Effective annual interest rate implicit in the loan is 12%. So 12% interest. This is your effective interest rate. And then the appropriate measurement basis for this loan is this much. Okay. Interest of foreign currency 6 lakhs is payable annually. Okay. All right. So this is how it is. Okay. So now 20 x1 x2. This table you will not prepare it in INR. You will prepare it in foreign currency. Why? Because effective rate of interest depends on the foreign currency, not on the Indian currency. If you start putting Indian currency, आपका effective rate change होगा because there is an interference of exchange rates. So therefore, this table we will prepare it on foreign currency, and then each transaction we will convert it using Ind AS 21 principles. So opening balance is 58 lakhs. Am I right? Yes. That is the loan taken. 58 lakhs at the rate of 12%, you get 6,96,000. That is also right. Out of which you are paying 6 lakhs. So therefore, the closing balance will be 58 lakhs 96,000. Closing balance will be 58 lakhs 96,000. Is it okay? So my finance cost is 6,96,000. Finance cost is 6,96,000. Okay. Have you copied this table? They have not asked for the entire period. They have asked only for the first year. So we will do this only for the first year. Okay. We will do this only for the first year. Done? Okay, all right. So now initial recognition ho gaya. Let us then move on to effective interest. Let us move on to effective interest. Foreign currency. It came to 6,96,000 as per the table. So INR value will be based on average rate. Why? Interest accrues throughout the year. Based on average rate as interest accrues throughout the year. So this will be, what is the average rate? Average rate for the year ended 31st March X2 is 2.42. 2.42. ठीक है. So into rupees 2.42 per foreign currency. So 6,96,000 into 2.42. This comes to how much? 16,84,320. 16,84,320. This is the foreign currency loan interest which you will be recording, Okay. What is the next thing that you have done? Sir, I have paid a coupon. Coupon paid. This is a transaction. So foreign currency terms, how much you paid? Sir, we have paid 6 lakhs. Okay. So if I have to convert it to INR, rate on the date of payment. So this is equal to FCY 6 lakhs into 31st March 20x2 2.75. 2.75. So 6 lakhs into 2.75 per FCY. 16,50,000. ये तो actual payment है. You go to the bank will actually collect 2.75 per FCY. So इतना तो आपके बैंक से surely जाएगा 16,50,000. 16,50,000. Okay. And finally, closing balance. So closing balance in foreign currency terms, it was how much? 58 lakhs 96,000. 58 lakhs 96,000. So INR rate on, sorry, closing rate. Since it is monetary item. So closing rate is how much? This will be 58 lakh 96,000 into closing rate is this 31st March. So 2.75. $162 14,000. $1,62,14,000. Okay. Now tell me, after doing all this, do you think my foreign currency loan account would be balanced? Answer is no, it won't. Because opening, I took it at a different rate. Interest, I took it at a different rate. Interest payment, I took it at a different rate, and closing is taken at the closing rate. So when all these transactions have based on different rates, obviously my account will not tally. I will be left with a balance. That balance becomes your foreign exchange gain or loss, which will go to the profit and loss account. Okay. So now if I prepare a foreign currency loan account, just a small loan account, and let us record the transaction. 1st April X1, you have taken the loan. So by bank, 1,45 lakhs. 31st March, by finance cost, 16 lakh 84 320. You are paying a coupon on 31st March 20X2 to bank account. 16,50,000. To balance carried down. 162, 14,000. Now all that you have to do is just balance the account. $178,64,000. So I am left with 16,79,680 by debit balance. So by forex loss transferred to P&L. Balancing figure. Have you guys understood this? Yes. Did you guys understand it? Arey bolo. Yes. Okay. Manini, did you follow? Okay. Rashmi Kamath, did you understand? All these figures I have converted based on Ind AS 21 principles. The underlying foreign currency balances I have followed Ind AS 109 principles. Okay. Sumit Jain, आपको समझा? Yes, आपने जवाब नहीं दिया. Shailendra, did you follow? Yes. ठीक है. चलो अच्छा है. Good. Great. So that takes care of this part. Then okay, all right. तो वो हो गया. So this part is done. Ind AS 21 read with 109 for instruments where amortized cost is being followed. For instruments where amortized cost is being followed as a liability. Okay, this is a liability. Okay, अच्छा उल्टा भी हो सकता है ना? Let me see if I have a question on that. Yes, उल्टा हो सकता है? Yes, हो सकता है. Means what? Means I have purchased, I have issued, I have invested in a bond, and because I have invested in a bond, वो मेरे लिए investment हो गया. Okay, so my now here as per Ind AS 109, we look at the cash flow test. You guys would be well aware of it, in fact more knowledgeable than me. If you look at the cash flow test, we typically look at what they call as the business model test. So if you are holding your investments solely for the purpose of principal and interest, SFPPL जिसको बोलते हैं, then we have to follow the amortized cost model. There is no option. However, if your business model permits both the things, so holding for the purpose of principal and interest, as well as whenever you get a chance, you want to sell it off if you get a good rate. Then if that is the case, you can follow the fair value through other comprehensive income. Investments in equity, you have two options. It's always fair valuation, but the fair valuation, you have two options. Either take it as FVTPL, no problem, or you make a one-time irrevocable option of recording fair value gains and losses through the other comprehensive income, which cannot be reclassified, which will not be reclassified. Okay, so that is one option which you are having. So SFPPL, amortized cost. Business model is principal and interest along with selling whenever you get a good price. That will give you an option of FVT OCI. And along with that, if it is an equity, then equity has to be fair valued. Only thing is you can either opt for FVTPL or you can opt for FVT OCI without reclassification to the P&L. I think you guys remember this. Yes, I think you guys remember this. So we will proceed to the next part on this matter. Okay, come to this question number 11. Ajat, these questions have incidentally been included as part of your test your knowledge questions. Okay, so if you look at the test your knowledge sections, see, question number 8 is what we did just now, and question number 7 we will be doing it later on. Okay, yes, the remaining will be checking it out. They are okay. Translate 6, 1, 2, 3. Okay, all right. ये तो कल Saturday के लिए है. We have done question number 4 just now. We have done question number 5 also. Okay, so these parts are all done. Okay, fair enough. All right, so let us take a look at this question. An Indian entity whose functional currency is rupees purchases US dollar denominated bond. It should be denominated. Okay. Bond at the fair value of USD 1000. The bond carries stated interest at 4.7% on the face value. Interest is received at the end of the year. The bond has a maturity period of 5 years and is redeemable at the face value of USD 1250. Fair value of the bond at the end of year 1 is 1060. Exchange rate on the date of transaction as well and at the end of year 1 are 40 and 45 respectively. Average rate exchange rate for the year is 42. The entity has determined that it is holding the bond as part of an investment portfolio. Holding the bond as part of an investment portfolio whose objective is met both by holding the asset to collect contractual cash flows as well as selling the asset. The purchased USD bond is to be classified under the FVT OCI category. Even if they did not give this last sentence, you should be able to understand that it is FVT OCI category. The bond results in an effective interest rate of 10% per annum. Calculate the gain or loss to be recognized in the P&L as well as other comprehensive income and pass the journal entries for the above. Round off the figures to the nearest rupees. Okay, fine. So let us pick up this question quickly. Chota sa question hai. Okay. So particulars. USD exchange rate rupees. Okay. So what have I done? First thing is I have invested in the bond at a fair value of USD 1000. So cost of the bond USD 1000. When you have invested, date of transaction it was 40. So rupees 40. So 1000 into 40 is 40,000. Accrued interest. Accrued interest $1,000 into, as I told you, recorded based on the foreign currency. What is the effective rate of interest? Effective rate of interest is 10%. So into 10%. So this gives you 100. Interest accrues throughout the year. So we take the average rate 42. So 4,200. Out of this, you are receiving an amount. Interest received. Dollars में 1,250. That is what they have given. The bond is redeemable at the face value of 1,250, interest at 4.7% on face value. So into 4.7%. So this gives you 58.75. This is received, matlab it is a transaction which is happening on the closing. So therefore that is 45. So 58.75 into 45, 2643.75. Acha, ideally, the bond should have this cost, amortized cost, 1041.25. This is amortized cost at end of year 1. And since it is a monetary item, I'll be converting it using the closing rate. So this is 46,856.25. Please remove this underline. It's not a total. Okay. So far, have you understood? So far, have you understood? Yes. So far, have you understood? Yes. Okay. What is the fair value of the bond they have given? The fair value is 1060. So 1060 at 45. 47,700. Okay. 47,700. Okay. Now recognition of amounts. इस बॉन्ड के साथ जो जो हो सकता है वो सब हमने कर दिया. Okay. So now only thing is what to record where is what is important. So interest income. How much? 4,200. This figure. 4,200. Where will this go? Sir, this will go in the P&L. This will go in the P&L. Okay. Next. Next. Principal amount. 1,000 tha. Yes. 45 minus 40. So this is exchange gain on principal. Exchange gain on principal. USD 1,000 into 45 minus 40. So that is how much? 5,000. 5,000. Yes. Next. Interest also accrued. So usme bhi you will be having your exchange gain. USD 100 based on effective rate into 45 minus 42. So this is 300. Yes, it's essentially 42, 45. Okay. So 5,300. Total exchange gain recognized in P&L. Total exchange gain recognized in P&L. All right. Then fair value gain in OCI. 1060 minus 1041.25 into rupees 45. ऐसे ही होता है ना? 843.75. 843.75. Okay. Have you understood? Yes. Have I taken all the entries? Yes. So let us pass a final journal entry. Investment in bond debit 47,700 minus 40,000. ये वाला फिगर 47 minus 40 7,700. आपके बैंक में पैसा आ रहा है in the form of coupon, so that is 2,643.75. To interest income, that is how much? 4,200. To exchange gain, that is how much? 5,300. To other comprehensive income, fair value gain 843.75. 843.75. If you check, your entry should tally and all the entries are considered. Yes. Are, have you understood? Yes. Did you understand? All clear? Soham, Sumit, Viraj, Manini, Rashmi, Shailendra, Sumit, Saksham, if you are there, he used to be there normally. Okay. All well. Okay, fine. Other confirmations, please. Yes. Okay. Anyways, so that takes care of foreign currency transactions. So as far as these items are concerned, how do you recognize? Well, first thing is loan is a monetary item, so you will state it at the closing rate. Second is coupon rate will be the payment, so therefore the payment will be translated at the rate on the date of payment. Effective interest rate is to calculate the interest for the entire year, hence you translate using the original rate. So we have recognized opening, closing, we have recognized effective interest rate, we have recognized coupon rate. They are since translated to the what you can say, to the functional currency using different rates. There obviously in the functional currency the account will not match, so the difference will be your foreign exchange gain or loss, okay, which is transferred to the P&L. So that is the way you will do the recording. So all the transactions will be recorded in the foreign currency. Apply Ind AS 109 in the foreign currency, convert using principles of Ind AS 21. So that takes care of a major chunk of your standard. Now, what is left on Saturday is foreign currency foreign operations consolidation. Okay, we will be doing a consolidation. I'll see, preferably I will share the format, but because there is a lot of multiplication and conversion between rates involved, I may be tempted to move towards Excel. Okay, so that will just speed up, and we can save time on some clerical calculations. Okay, so we shall conclude the class for today. Yes, anybody has any doubts, any queries, or any comments, or any criticisms, or any suggestions? Please feel free to ask. Okay. Please feel free to ask. Any feedback you can ask, you can surely share it with the institute. Yes. Thank you. Okay. Soham, all well from your side? Yes. Okay, so see you guys on Saturday in that case. Okay, see you on Saturday. Revise consolidation and come. At least I do not want you to flipper around with the steps. Okay, it's a step-by-step process. So step number 1, draw the consolidated balance sheet. Step number 2, prepare working notes 1, 2, and 3. Working note 1, assets, liabilities, consolidation, adjustments, total of the parent and the subsidiaries. Then working note 1, your reserves. Working note 2, your COC. Working note 3, NCI. All of that you will have to all of that you will have to just revise in case it's not freshly printed in your mind. And then we will do one question. It has still not yet come because it's a very tedious and lengthy process, but for our understanding of the standard, we should be able to do a question on consolidation. Okay, so thank you everyone, and see you on Saturday. Thank you. Bye-bye.